Chair now recognizes the gentleman from North Carolina, Mr. Pittenger.
Thank you, Mr. Chairman. I would like to just welcome those who have come today with your T-shirts on. What recovery? Let our wages grow. Whose recovery? Very pointed and clear statements, and I really commend you for being here and seeing this process. Yes, the reality is that this recovery is the most dismal, slowest, tepid recovery we've ever had from a recession in recorded history. And we look at the realities of this recovery. This last report of new jobs was only 150,000 new jobs. We have a 2% dismal economic growth. We have the people who, frankly, the demographic group that is the lowest recovery is the low-income minority people in this country. That demographic group has moved up the ladder less than any other group, albeit an intense effort, well-intended, I'm sure, by the Obama administration, by Chair Yellen, but through it, what we've seen is very accommodative monetary policy. We've seen a high regulatory environment. We've seen Obamacare. We've seen the highest corporate tax rates in the industrialized world. All of this has achieved this dismal recovery. And I would say to you, the contrast is, back in the 70s, we had the same type of dismal economic outlook, high inflation, high unemployment. And yet what happened? We reduced the regulatory environment, we reduced the tax burden, and the economy took off. We were creating 300,000, 400,000, 500,000 jobs a month. One month, 1 million jobs. We were growing up to 6%. It seems to me that logic may come in, that perhaps well-intended policies have had an adverse effect, adverse outcome of what was ever intended. And Chair Yellen, I commend you for your work and what you've sought to do, but it seems to me that these accommodative policies have contributed to where we are today. I would say, Chair Yellen, I would like to thank you in your remarks that you made reference to the fact that there are those who are available to work but not actively searching for work. And you've also made reference to those who are working part-time and can't get full-time jobs. Now, these numbers are not included in the current unemployment rate of 4.9%. So in reality, we're really talking around 10, 11, 12% of the stats that I've seen of real unemployment. Would that not be correct, Chair Yellen?
Well, broader measures of unemployment are significantly higher. For example, a definition that the BLS refers to as U6 that includes both of the groups you mentioned, involuntary, part-time.
What I want to make is
and discouraged.
The real numbers are much higher than 4.9%. So it's really disingenuous to say to the American people that these policies have contributed toward 4.9% unemployment. In reality, it's in the real world where people are living, and we have some of them here today, it's far less. And I think that should be understood and absorbed by these wonderful people who have come, that the types of policies that have been enacted, been enforced this last 7 years have worked against your interest. And what grew the American economy were small businesses who could go get loans. That entrepreneur who's been the lifeblood of our economy can't go to a bank today to get that new loan because of compliance requirements. They are the people who create those new jobs. And on top of that, you have the burden of obligations of Obamacare and small business. What are they doing? They're cutting jobs so they don't have to comply. What will grow your economy, what will create the jobs that you earnestly want, is an open market where companies can grow and not have this intense regulatory environment, whether it's through monetary accommodative policy or through onerous regulatory environments placed upon them. So I want to encourage you with that reality that we can find that type of opportunity economy. I would say to you, Chair Yellen, that the regulatory rule book, it's been a constant state of revision for the last 6 years. Can you see the benefit then as a result of what we discussed in pausing this process in order to assess the community impact of these regulations that are having on the economy before we proceed further?
Well, we have several regulations that we intend to put out during this coming year. And in terms of the list of what was mandated by Dodd-Frank, we've made substantial progress.
Consider that outcome.
nearing the end.
We're seeing today, I think it needs to be done.